Well, I think investors are nervous about what Powell is going to say. The fixed income market is clearly very long duration, long bonds, and there is a fear that if he's not as forthcoming as the market expects him to be, that bonds will back up. That said, it looks like today's move was actually a European move. German yields have backed up a bit more than U.S. yields, and the move started when the European market opened. U.S. yields weren't doing much before. So I suspect it's two issues, both related to the market being long, but the immediate move today not necessarily driven by Powell fears.
All right, Steve, let's bring it back to the U.S. Right now, and obviously the market pricing has shifted over the last couple of days and since NFP, but the market right now is pricing in about 2.5 rate cuts by the end of the year. According to your assessment, how much of that is on back of the actual weakness in the economy versus just inflation undershooting its target?
Look, I think the market is underestimating how much pressure the Fed is under because they're missing their targets and they're missing it by quite a bit more than they expected it to be. So, I think that 1.5 to 2, eases, 25 basis point eases can be related to the inflation side. They've devoted entire conferences to worrying about the zero bound. It's something that's very important to them. Excuse me. By contrast, I think that, the output side is maybe, 0.5%, 1 to 0.5%. It's much less important, I think, in terms of fixed income pricing right now.
Quick question for you, Stephen. If we see a major surprise, we see a larger than expected cut this month, does that make a difference compared to 2 smaller cuts over the course of the next 6 months?
It makes a small difference. I think the issue for the market is where you end up and how long you keep the stimulus in place. I think the view that if they do a surprise but then do nothing, it's going to be more powerful than if they, say, do 2 smaller surprises. It's not really based on the analytics of the models, and there's no real evidence for it. So I suspect that they're going to do 25. I don't think they want to use up that much ammunition that fast, given that there's nothing on the economy that's that stressing. The economy looks softish. It doesn't look terrible. So I think they'll do 25 clips on that basis.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.